In this video, I'm going to show you how to trade the New York trading session in 8 simple steps. Hello and welcome to Mindfully Trading. If you're new to my channel, my name is Emily, and on Mindfully Trading, I share educational resources for trading the Forex market, as well as an insight into my personal journey as a Forex trader. I've been trading the financial markets for over 5 years now. I originally started day trading the US stock market with Warrior Trading, and since then I've transitioned to day trading Forex, focusing primarily on Great British Pound US dollar. I trade in both my live account with Vantage Markets, and I also trade a funded account with a prop firm, the 5%ers, who I will talk about a little bit later in this video. But in this video, I'm going to be showing you a beautiful winning trade that I took on pound dollar. This trade was taken yesterday, and I'm going to break this down in 8 simple steps so that you can follow along and learn my entire process from start to the end. If you want to follow along with me and make notes on this all-important trading plan, then I do have a free trading plan template that you can download and use for yourself. I will include a link to this in the description below. If you're brand new to trading the Forex markets and you want to learn more, I've recently released a book, Forex Trading 101. It's a beginner's guide to trading. There's also a link to that in the description below if you want to find out some more information, as well as all of the other resources that we'll be using in this video. As always, remember to hit the like button and subscribe, and let's get straight to it. Before we jump onto the charts, I just want to show to you the trade that I took. So we are recapping a trade that I did take in the live markets, and here is the trade in front of you now. You can see it was a winning trade taken on pound dollar. To avoid this video going on too long, I'm going to get straight into it. So here we are on TradingView, my charting platform. And my first step in my trading plan process is my top-down analysis. And to do this, we're going to start on the daily time frame. Now I'm going to zoom right in on the daily time frame and what I am most interested in, because this is an intraday trading strategy. That is the most important part because that gives you the time frame. So although we're on the daily, and all of the daily candles can be interesting depending on what strategy you're using, because this is intraday, I'm really pretty much focused on the most recent daily candlesticks. In particular, we'll be looking at the previous daily candle. Now, because this is a trade that I have taken, I'm going to use the bar replay tool to go back in time so that we can see exactly what I saw on the day the trade was taken. And this is what I saw. Now, as you can see, although we have been coming up in an uptrend on the daily, we at the moment seem to be ranging. We haven't broken this low here, and we haven't broken the high. We're kind of ranging. Ranging markets aren't exactly the best if you are a trend continuation trader, but they can provide really good opportunities for short-term scalping intraday trades, and that's what this trade is all about. So once I identified that there wasn't really a lot of scope for movement because we're in a range, I don't want to overstay my welcome, I thought to myself, right, this is going to be a shorter base scalping trade. And the most important things to note were the previous daily candlestick. And as you can see, the previous daily candlestick was in fact bearish. It was a slight doji, so there is indecision there, but there is more strength to the downside. It's closed bearish. We have this large upper wick rejecting the highs. So if anything, I'm going to be more short biased. Now that we have our bias from the daily time frame, let's do top-down analysis going down to the 4-hourly. Now, usually with top-down analysis, most traders tend to stick to 3 time frames. I personally don't have a strict plan when it comes to top-down analysis. The most important aspects of it to me are that my analysis is mainly carried out on the daily time frame because that is the authority time frame, and my trade execution is usually carried out on the 15-minute or the 5-minute time frame. More often than not, it's the 5-minute time frame. Now, I do like to hop about on the 4-hourly and then the 1-hourly just to give me an idea of the flow of price, and that's about it for me. So on the 4-hourly time frame here, all I'm going to do before we get into it is go into my settings and add the session breaks, because it's a little bit more clear then what day we're looking at. And this is what I could see on the 4-hourly time frame, showing more interest in the intraday aspect of this. You can see that price opened, we had a little doji, it had a little push up, but there's barely any momentum there to the upside. And then the 2 o'clock closing candle in the New York session was a very strong push down, so we broke this structure. And that is pretty much all I took from the 4-hourly time frame. It's just a confirmation where the momentum is. And drop into the 1-hourly time frame, it pretty much just gives you the same information. The most important thing to me was that the recent hourly close was a bearish candle. So again, it's moving down. From there, I finished up my top-down analysis approach on the 5-minute chart, ready for my trade plan. And I've got it zoomed in so that I can just see the start of the trading day. Now this leads me into step 2 of my trading plan, and that is adding in my indicators. Now these are indicators I like to use to show me key levels. They're really crucial as part of my trading plan. The first key level, the first indicator I like to add to show that is the previous daily high and low. And that's pretty much what it shows. Up here is the previous daily high and down here is the previous daily low. And my strategy involves utilizing these key levels. And the next indicator I like to add to show me the key level is the institutional price levels indicator. And this shows the whole and the half dollar or pound amount. So this one here is 1.27, up here is 1.2750, and then naturally below 1.2650. In fact, you can see that pretty much intraday price has been consolidating around this institutional price level. So it's a very key part of my trading strategy. So we've done top-down analysis, we've added our key level indicators. The third step in my trading plan is simply to look at market structure. Now this is also very, very important because although I am short biased, the big question is where is the best place to go short? And that's what market structure tells you. So I'm going to just use this tool to show you how I analyze this. Now, very simply, from the open of the start of the day, I observe what price has done. So it dropped down, it made a low. It pushed up, it broke the daily open, and it made a high here. We had a pullback, a new low, which was confirmed when price broke and closed above the previous high here. And the same again, we had another pullback here and a push up into London. So price is swinging higher, and this is the most recent low. Now, what was interesting is that as price went on to the end of the London session, it pulled back and it broke this low and it made a new low here, closed below this one. It pushed up here, it couldn't break this high, so it wasn't just a deeper pullback, it was a failed attempt at a new high. We had a push up here, price dropped down here, it broke the previous low and closed below it. It made another attempt to make a high, which actually formed a double top pattern, which would have been a good place to get short, but that wasn't in my strategy. I wasn't looking at the charts then. And this was confirmed when price dropped down here just before the New York Open and made a new low. So what we're seeing here is what started off the start of the day as an uptrend turned into the start of a downtrend, or at least that's how I'm reading this flow in market structure. Now these are really key points because from this I can see that the most recent lower high would be this level here. Moving on into step 4, that's analysing price action. It's very similar to market structure. Market structure is simply looking at highs and lows and understanding whether we are moving up or moving down. So from this we can see market structure was going up and now it seems to be coming down. And price action tells us a little bit more. So price action is where you can actually look at what candlesticks are forming, where momentum is coming in, and if there are any patterns. So I've already mentioned one here, the double top pattern. We had these huge momentum candlesticks coming down to the downside. So momentum's coming in, volume is coming in, and price broke this low here, making a new low. So all of this is telling a story, and a story is helping us to formulate a trading plan. For me, it's a trading plan for a short. So as New York session opened at 1:30, at this point I haven't got anything to get in on yet because I need price to either retrace a little bit more to this level, or I'm looking for it to make a new low, and then I can use this most recent structure to formulate a plan. So at this point, I was waiting and watching, waiting for that 4-hourly candle close and waiting to see what price was going to do. I thought that price may retreat to this key level, it may act as a magnet, or it would break this level. So until one of those things are done, I'm waiting, and that's what my trade alerts are for. Now this was very interesting. At 2:10, my trade alert went off, which was just below the low here. So I had a look at my charts, and looking back at market structure, you can see that this was the most recent low of the day. This made one here. It pulled back up to this level here, and then this momentum candlestick broke the low. So we have new structure forming. Let's zoom in and have a look at that. So price came down here, we pulled up, and then we push down, and that marks this point here as the new lower high. And for me, this is great because this is a trade plan forming and it's very close to being executed. And this moves on to the next step in my trading plan process. And that's where I incorporate a Fibonacci retracement to be able to highlight the best place for an entry for my short. So from the high here, I dropped it at the low of this candlestick. And it brings up these three areas of optimum trade entry, the 62%, 70%, and 79%. And I just simply set an order at the lower of these three levels, which was at 90. I placed my stop above the high. Now this is actually one of the tightest stops I've placed for some time. I usually like to set a 10 minimum stop, but at this point, there's no point having a huge stop. If it breaks the high here and carries on, it's probably going to go on up here. So it'd be no point keeping in this trade. And then my target was both a break of the low, a minimum of 1.5R as per my plan. And it was nicely placed because it's basically aiming for a run to this previous daily low, which is where liquidity would be sitting. Once I have my trade plan set, I set my sell limit order. So I'm waiting for price to retrace up to this level and automatically get me into the market. Once I had this all set in my broker, my sell limit, my stop loss, my take profit order, I set an alert at my entry, I set an alert at my stop, and I set an alert at my target. And then I walked away because my phone alert would trigger me. It would let me know when I'm triggered into this trade, and it would let me know whether it won or whether it lost. And as you can imagine, I'm a busy mum of two. I've got a busy life, busy routine to do. So I got back to that and let the trade work out. And that's why this was a beautiful trade, because it was one of those rare moments that can happen in the markets. It doesn't happen all the time. Make sure you take that on board, guys. This doesn't happen all the time for me, but when it does, it's lovely. And it's a beautiful trade because it literally pushed up. It just tapped my order. It literally just put me in drawdown by about 1 pip, if that. So it triggered me in nicely, and then thought about it for a little bit, and then it just dropped down to my target. So this was a beautiful trade taken. I got triggered in about 2:15 and it hit my target 10 to 3. So in around about half an hour, I managed to make 1.5R profit, which for my current account at the moment with the prop from the 5%ers equated to just over $90, because I'm risking very little to gain a nice buffer on this account. You might be wondering, why are you making such little money? Why are you risking so little on a $20,000 account? And that's because I am currently in the instant funding program with the 5%ers. So this is a challenge where I have a very tight stop out level. If I hit 6% loss on this account, I blow up my account basically. So I'm risking a very small amount of 0.3% per trade of my overall account equity per trade to be able to respect the stop out level. And I'm focusing on my process. I'm also trading my live account so I can enjoy making money in that. But this account, I'm treating it as a longer term investment account. It's not an account to make a living on from trading. It's just something extra to make some money in the background, because if I focus on the process, carry on making money as I am, and once I hit this evaluation target of 10%, then my account is doubled to $40,000. And the process repeats. Every time I hit 10% profit, my account size is doubled. That's why it's called a hypergrowth account. It's an interesting way to use a prop firm. More frequently, prop firms can be thought of as a tool to be able to make money with, to make a living with day trading, because ideally you need a lot more money, and they can do that. And the high stakes program is a very good option for that. But the hypergrowth program, in my opinion, is also very good for more of an investment account option. And that's what I'm using it for. If you want some more information on the 5%ers themselves, if you want to check out the programs, I have got a link below in the description. And before we finish this video, I almost forgot to share with you the last step in my trading plan. And this is one of the most important steps that can often be overlooked by traders, and that is to review the trade. So as you can see here, this is a screenshot that I did once I actually finished trading. Once the trade hit my target, I jumped on the laptop before I completed my trading day. And I made the notes and my reflections. As you can see, I was actually originally looking to get in on a pullback to this double top. It didn't happen, so I recalculated that, because the market's always moving and you have to move with it. And I made all of my notes here so that in the future, it's just another trade that I can look back on and learn from if I need it. It's essential as part of your continuous professional development as a trader to do this process, to review and reflect and grow. As always, if you've enjoyed this video, do let me know by smashing that like button. Don't forget to subscribe to the channel if you want more videos, and I'll catch you in my next one. Thanks for watching. Bye.